Well, they obviously haven't been traded well. Goldman Sachs is the first name I think of when I go to the banks, and they reported what I thought was a tremendous quarter, but the price action since has been miserable. Think about it. Since making an all-time high, Goldman's down over 20% in a couple months on what's been pretty decent tape. Clearly telling you something. I've been one of these people that's been bullish in the banks, but now I have to ask myself, does Goldman need to recapture that 225 level that we talked about? And Tim talked about this in JP Morgan. 84 critical level, closed below it yesterday, down through it again today. The last piece is XLF has to hold 23.
I think Goldman's quarter was terrible. Yeah, I think they absolutely underperformed the peer group, and that to me would be an explanation why they would be underperforming. But fair enough. Look, Goldman's franchise is you could argue unparalleled. JP Morgan, as we pointed out, if you take a trend line off of the June 2016 lows, you can make an argument that today we broke through that trend line with JP Morgan at 83 bucks. So if you think about it, we're right back to where we were 2 days after the elections for financials. And the question is, what do you do now? To me, I think with those numbers under their belt, and I realize we've heard from the banks and trading volumes are not what they were. The FIC business is not what it was. I think the second quarter numbers are not going to be the first quarter.
The commentary today out of the Deutsche Bank conference from JP Morgan, from Bank of America, that was very disturbing. It was essentially a pre-announcement mid-quarter when JP Morgan CFO says, you know what, trading revenue is going to be down about 15. They're down 15% already.
And so we talk about the VIX every night and how it's at historic lows, but that's not just stocks. I mean, you're talking currencies, commodities, fixed income. It's been flatlined. So it doesn't really matter if you have a specialty and somebody like a Goldman who might have more of a specialty in fixed income and commodities. It doesn't matter. The volumes and the volatility is just not there. Then add into that the fact that you have a yield curve, at least on the long end, that seems to be going lower. I have been a person who has wanted to buy the banks, but this action, coupled with a little bit of oil, which we're going to talk about, has me concerned.
Yeah, and I think it's important, and I'm not saying that what guys, comment is a false narrative about the banks. We all know that they're cheap, and we know that some have, continued to trade over book value throughout this whole downturn over the last few months, at least in their stock prices. But when you look at Goldman, okay, they had a bad quarter in trading relative to all of their peers. It was down 2% year over year. So when you have JP Morgan saying that FIC trading is going to be down 15% year over year, or it is in the first 2 months of the quarter, and that Bank of America is saying down 10 to 12%, that probably doesn't bode well for Goldman Sachs because they actually lost share for all intents and purposes in Q1. So that is one of the reasons why that stock got the hardest hit today.